This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shahin.
Good day, this is Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth, here on every weekend talking about all important topics of personal finance. My job is to go over the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of my colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short. Or you can get this episode or any one of our previous episodes as well through our Knowledge Center. You get market commentary. You can also look at our YouTube channel, and we have a lot of strategies there that can give you help. Now, folks, I'm the president of Falcon Wealth Planning. We are the only non-commissioned, true fiduciary, folks, and we help you with all aspects of personal finance, folks. It doesn't matter where you are. It doesn't matter if you're retired, not retired, in looking at where you want to move, talking about investments, estate planning, insurance, taxes, folks, you name it, anything that involves a dollar sign, we can help with. Give us a call. We'd love to offer 1 to 2 meetings, 1 to 2 hours of our time at no cost, folks. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We can help relate this show to your specific situation, folks. Anything that involves money, we can help with, folks. We do this on a daily basis. And a lot of commentary that we're getting on right now is talking about the stock market and just how it's going up and down and all over the place right now. And people are just getting uncomfortable. And there's a reason to. There's a couple wars going on right now. One in Ukraine and one in the Middle East. You got people divided here in our country, not happy what's going on with whether it's Speaker of the House, whether it is with our current president, whatever side you're on. There's always reasons for turmoil right now. And you're seeing the effect on the stock market. It has had a retreat of maybe 10 to 15% in the past few months alone. What looked like a fantastic year. Heck, the Dow Jones is flat. It was up double digits, 10 to 15%. NASDAQ was up almost 40%, now down under 30. My point is, yes, there's a lot of concern here. And then what are you doing with your portfolios? Remember, last year's concern was the safe stuff, the bonds. This year's concern is more the stock market. So there's always something to be worried about, right? And we still have more rising interest rates. We still are feeling inflation. Heck, paying at the pump cost me like $150 to fill up my car. It was crazy. And I don't even have a big car. Here in California, easily you can be paying $6 to $7 a gallon. So yes, there's a lot to go over, but what are you doing about it? Are you riding this wave? Are you enjoying sitting in cash earning 5%? Because sometimes, most of the time, as I read in previous shows here, that when cash rates are high, the stock market overperforms the most. I'm not trying to say past history is guaranteed future results. I'm not saying that, but what I am saying is it's easy to be content right now, sitting on the sidelines, especially when your cash is actually earning something. Heck, some of you in the short term might say cash outperformed every investment class that's out there. I'm with you. I get it. But this is the time that you need to act. Warren Buffett says it perfectly. When those are fearful, that's when you need to be greedy. And when those are greedy is when you be fearful. And right now, people are fearful. So what are you going to do? As the Rothschild said, when there's blood on the streets, you buy. And right now, this is a time of turmoil any way you look at it. Now, I'm not saying try to capitalize off the turmoil here. I'm not happy for turmoil. I'm just making a simple comment is what are you doing differently? I mean, obviously everything around you has changed. Everything. Whether it's post-COVID, whether it's politics, whether it's political climate, whether it's the stock market. From January to today, things have changed. What have you done? Do you understand what I'm saying? Because even if you bought large cap growth, was up 40%, now it's up 25%. Shouldn't you have done something in between there? Like, do you have a strategy in place? What about bonds? Bonds were terrible last year, down 15+%, depending on how long duration you had. Then they were good this year. Now it's like, big swings in the market. Have you done anything? The most simplest form is something called a rebalance, which means you take what you made money on, bought what you lost money on. Well, you're like, last year, almost everything lost. Well, you sell what you lost least amount in and buy what you lost the most in. But the point is, that's what's called strategy. And my biggest concern is you're not having any strategy. And I see it often. It's so easy to be content and just say, you know what, things have always worked out the way I've been continually doing it. And that may be the case. But what if you can enhance a return by 3, 5, 10+% annualized over long periods of time by having a strategy in place to continue to buy over time? Now, that's not a guarantee that you're going to do that much better. But I think we could agree to take a big overview of what you're looking at, what you're doing, and making sure what you're doing today is still good. Because what you could have been doing is investing in large tech companies, which, oh, by the way, happened in the early 2000s. It took 14 years for it to recapture what it lost. 14 years just to come back even. Your $1 million went to 400,000. Your 400,000 took 14 years to go back to $1 million. What if you're retired? What if retirement's closer than 14 years from now? Do you get what I'm saying? You have to reanalyze what is going on. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every week and talking about all important topics of personal finance. And I just wanted to go over with you the simple concept of understanding your situation. Because also what I'm seeing out there is like these frauds that are coming out here and trying to sell you some insurance products, saying it's an investment. Think about that in insurance. It's illegal to profit off insurance. You want proof of that? Try me getting a $100 million life insurance policy. You know why I'll get declined? Because my family would be happy I'm dead. You get what I'm saying? It doesn't bring them whole. It enhances their life, which is not okay. The idea with all this, of course, is what are you doing in your current portfolio? Don't get fearful, because that's when the salespeople come out, try to take you, because they know you're not happy with the stock market right now. They want you to sell and put your money somewhere else, and they're trying to sell you false sense of security. I'm here to say there is no free lunch, number one, or free dinner from those free dinner seminars you're probably being offered. And there is no easy way to be successful, right? In your professional career, in your personal career. You've had to go through some turmoil. You had to go over some fights. You have to go over some hurdles to be successful. You have to climb that corporate ladder or go through those growing pains starting your own business. What makes you think wealth accumulation is not different? Why? It is exactly the same. There are these bumps in the road, these detours that sometimes are being needed to take, and volatility that happens. You have to know that is normal. This is no different, because you got to think that what you're investing in, what you're hopefully investing in, are companies, whether it's an indice or not, right? A basket of stocks or not, the S&P 500 or not. They're companies of the 500 companies that are in there. And each company has people working for them and people running them. Why is that important? So those people are resilient. Those people's goal is to keep going up. Well, as long as we agree that people's goal in life is to live and to prosper, then the stock market goes up. Who cares about times of turmoil? Every time you get in a fight, what did you do? Punch somebody in the face? Divorce somebody? Quit your job? No, because that's not being resilient. And those who succeed are resilient. Those overcoming adversity are the ones that win. And the stock market is no different. Don't play a fool of what's going on. Don't fall into the news. But the question remains, what are you doing differently? Folks, if you need help with understanding what you're doing, what you should be doing, and taking a look at what you've already done, folks, give us a call. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website at falconwealthplanning.com. That's falconwp.com for short, where we can put a personal assessment for you that gives you 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost. And we have offices all over. We can meet with you in person or through Zoom, whatever the case is. Doesn't matter where you are in the country, we can help. Because looking at your portfolio, you got to see, number one, how are you concentrated in two aspects? Number one, large caps, mid caps, or small caps, right? What asset class are you in? How much do you have in US versus international? Do you have any fixed income? And the other side is sector. How are you currently positioned on a sector basis? Is it all big tech? Is it defense, consumer staples? You get what I'm saying? Healthcare, finance, so on and so forth. Are you truly diversified? And what tilts in your portfolio should you have? Because what I see more times than not is people bought an investment and they said they did great on it. They put 10,000 and now it's worth 100,000. They made 10 times their money. God bless them. But now it's such a large position in your portfolio. And we are just in different times right now. What's great is not always great forever. Apple is a great company until a company called Banana comes in and puts them out of business. Jeff Bezos was quoted saying, his goal as CEO is to keep Amazon in business as long as possible because one day they'll be out of it. You know what's a good example of that? General Electric. Used to be one of the biggest companies in the world. And now they're a tenth of the size and sold off all their profitable divisions just to stay afloat. You understand? People adapt, but are you still doing the same thing over and over? Are you still having the same holdings? Do you still have those baby stock in your portfolio that you're like, I can't sell it. This is my baby. Well, I already lost so much. What's the point of selling it now? I get it. I've been there. The idea is you have to adapt. You have to overcome adversity and you have to prioritize your financial goals. You may not have to take as much risk to achieve your financial goals that you have. You may not need to invest in the way you're investing. It may be causing unnecessary taxation, unnecessary reduction of returns, and unnecessary risk. You have to analyze these things. And I want to go over with you the items that you should be doing and the things you should be taking into account. Because what I see more times than not is people mess up. People don't do things right, and people stay the same. When you go to a high school reunion, most time there's that little bit of people that never changed. And those are normally not the most the most successful people at those reunions. So those who have adapted, those that adapted to the environment around them and to do what is necessary to succeed. I'm just telling you from experience, folks. I deal with people like you all day long. And changes are necessary. If you need help with those, we want you to give us a call. If you just want to see if you need to do changes, give us a call. If you want to take a look at what you're doing that's well and what you're doing that's not, give us a call. That's what we're here for, folks. Like I said, we're offering 1 to 2 meetings, 1 to 2 hours of our time at no cost, folks. Give us a call. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go and learn more about us and even put in a form fill there so we can give you a buzz and set up a meeting. Folks, we're going to go on a quick break. When we come back, we're going to talk more about, number one, what you should be avoiding, and number two, what you should be doing. Because this is the time where predators are out there trying to take advantage of you. Times of duress, people get desperate. Don't be that person that falls for these tactics. We'll be right back after a few words. This is Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth. That's on every weekend. We're going over all important topics of personal finance. We're going over retirement planning, making sure you're prepared for retirement, Social Security and strategies, real estate, taxes, avoiding them now and in the future, investments, reducing fees, commissions, and so on, insurance, and estate planning. Folks, we are offering a free financial assessment that you could take advantage of. We have offices all across Southern California, including the Inland Empire. Give us a call to take advantage. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website, falconwealthplanning.com. That's falconwp.com for short. Enjoy the show. We look forward to serving you. Welcome back, folks. This is Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth, here on every weekend, talking about all important topics of personal finance. And today I was just talking about your accounts. You might not be so happy with your accounts. Definitely in 2022, you weren't happy. Find me the person that made a lot of money in 2022. They don't exist. Almost every single asset class lost money. Almost everyone, like literally 96% of all asset classes lost money. Okay. Now find me though. Now, by the way, people were happy in 2023. Why? Because the market really started off with a boom. It did very well, which normally happens after market dropped, which to my point, don't overreact. Imagine taking all the risk, right? There's risks and rewards to investing. Why do we invest? Yeah, you could say it. To make money. Hello? You don't invest to lose, you invest to make. But what's the risk of investing? To lose money. Well, you already lost the money. Stick around for the reward. What is wrong with you? It's like going to a movie theater, paying for your ticket, and then leaving before the movie starts because you didn't like one of the previews. Seriously? You know the movie's going to be good. You know it's the characters you want, the script that you want, and the actors you want. So don't overreact on something that is temporary. You're not watching the movie about the preview. You're watching the movie of the movie that you know the synopsis, the plot, and the story about. You already know what the ending is. So my comment to you is focus on the eye on the prize and avoid those people trying to take advantage of you. The people that are trying to tell you gold, that America's going downhill. How perfect of it if I was a commission-based gouger trying to take advantage of people. I'd be selling gold left and right. It's unregulated. SEC can't regulate that. They could charge you 50% commission. You give them 100 grand, they'll pocket 50 grand without you even knowing it. And you only have 50,000 in gold. And then you go to sell it later. Let's say that 50,000 goes to 100. They could take another 50% on the sell side. You know, the only person making money is the person who sold it for you and bought it for you, not you. Unregulated. And how perfect of it, doesn't it feel like America right now has some turmoil? Just internally, you have Democrats or Republicans like so against each other. Be careful for gold. You see all this crap that's coming on TV and radio infomercials and on the internet talking about how America's going to hell and you should have gold? Are you serious? Okay, let's just say it goes to gold. What are you going to do? You're going to take a piece, chip off a piece of that gold and go give it to Starbucks? Seriously? Give me a break. I mean, people are so funny sometimes. I don't get it. It's like, oh, wow, Gabriel, I heard you say it. It sounded stupid when you said it, but I swear that endofusa.org seems so legitimate. Yeah, because it's designed to convince you and fool with you and play with your emotions. This is why you need a financial partner. This is why you need somebody there to slap you a little bit. So our wives and spouses and husbands do that sometimes. They shake us a little bit. Family does that too. If you're doing it alone, you shouldn't be. And you have professional or personal people around you, still, you need that personal opinion because those are the professional opinion because those professionals have seen this movie before. They've seen these same infomercials come out in 2020, 2018, 2008 through 2010, in the dot-com bubble, in the 90s, in the 80s, and you get what I'm saying? Been around forever. Avoid those things. Same with insurance products and people going to free dinner seminars. Listen, go for the free dinner. I have nothing against a free dinner, but my God, their job is to make you feel warm and fuzzy and make you feel important and successful. And then they'll sell you and take advantage of you because they're lying to you on how things work. Guaranteed income, great. The IRS says when you put your money into an annuity, you're a loser. Not like a loser in life, just a loser in the investment. You lost 50% of that money. That 50% is going to the annuity company. Like, seriously? Think about that for a second. The IRS deems it where you're going to lose half of it. Is that something you want to do? It's almost like a rhetorical question. I don't expect an answer. But people buy annuities because they believe the person that's selling it to them. It's sad. I don't blame you. When somebody tells me something, I expect it to be right as well. Right? We're honest people. We assume when somebody tells you something and gives you their word, they're honest too. Folks, welcome to the financial services industry. That's not always the case. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth here on every weekend talking about all important topics in personal finance. And I'm here to tell you to avoid these insurance salespeople trying to sell you annuities and insurance products, especially these index universal lives. Sounds great. till it's not. Find me somebody who's had it 20 years. Oh, I can't. It's so new because it's so great. Give me a break. It's garbage. Stock market, you know why all the mega wealthy has their money in the stock markets over real estate and everything else? Because there's over 100 years of data to support it. I don't like the idea of this mumbo jumbo nonsense trying to take advantage of you. What's my recommendation to you? Stick in the stock market. I'm not saying buy Apple, buy Tesla, buy Amazon, buy Google, buy Facebook. I'm not saying any of that. I said the stock market, which, oh, by the way, contains all those companies. And don't just get large companies, but medium companies, but small companies, international companies, emerging markets, developed markets. You get what I'm saying? You see what you're doing? You're avoiding sectors, by the way, because each asset class has a sector. I'm just suggesting that this could be a fantastic strategy for you to be globally diversified. And more importantly, you have to figure out how much is in each category. You know, the stock market has about a 77% exposure just in large companies. Is that what you should do? Well, it depends on your situation. Depends on your risk tolerance. Depends on how much you need for a rate of return. Now, I know what you're saying. I want 10%. I want 20. I want 30. You could be Bill Gates. And assuming Bill Gates spends $1 million a year, let's just say that's a lot of money, right? That's like $85,000 a month. You know what I mean? That's a lot of money. And he has, let's say, $100 billion. He will never outlive his money. His money could be earning 0.0%, right? Because if he lives for 100 years at $1 million, that's only 100 million. And oh, by the way, he has 100 billion. You get what I'm saying, right? But because of the respect of money, and because you want to keep up with inflation, so on and so forth, and you want to help people, whether it's your kids, your heirs, or charity, or just other people, you can put it to work. But do you have to go for a 10 to 20% rate of return? No. But there are methods that you can invest in, such as globally diversified portfolios, which you can get a controlled risk and return environment. Folks, I'm not making this up. This is what pension funds do, corporations, foundations, endowments. If it's good enough for trillions and trillions and trillions of dollars, shouldn't it be good for you and I? I mean, their job, think of a pension. They have to pay out CalPERS and CalSTRS $5 to $10 billion a month. They can't afford a lot of ups and downs and volatility. That's how you need to be thinking of your money, as a quasi pension. And folks, this is why we're offering a pre-financial assessment. Give us a call. We'll offer you 1 to 2 meetings, 1 to 2 hours of our time at no cost. We'll help relate the show to your specific situation. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We can help answer the questions that you have and make sure you are not being attacked for people trying to take advantage of you. Financially attacked, financially taken advantage of. Sad. Folks, that was a Fast show. I want to thank you for tuning in with me this weekend. You can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can get this episode or any one of our previous episodes as well, where you can go to our knowledge center and where you can find market commentary and strategies through our YouTube channel. And feel free to get these episodes on Spotify and podcasts as well. Folks, that was a fast show. If you have any questions, don't always forget to go to radio@falconwp.com, where you can send questions that you have that I will read on air. Folks, have a fantastic weekend. Have a great week, and God bless.